With the rise of the gig economy and remote work, more Americans than ever are using a portion of their home exclusively for business. If you are a freelancer, a small business owner, or a contractor, the IRS allows you to deduct a portion of your home's expenses, like rent, utilities, and insurance, through Form 8829. However, this is one of the most misunderstood forms in the tax code. For the 2026 filing season, the One Big Beautiful Bill Act, OBBBA, has introduced new clarifications for digital entrepreneurs, making it essential to get your exclusive use calculations right. Today, we're going to break down Form 8829 so you can accurately turn your workspace into a powerful tax shield. Before you even pick up Form 8829, you must pass the IRS Gold Standard test. To qualify for this deduction, a specific part of your home must be used regularly and exclusively for your business. Exclusively means that the area cannot be used for any personal purposes. If your office is also your guest bedroom or your child's playroom, the IRS will flatly deny the deduction. Regularly means you use it on a consistent basis as your principal place of business. One important note for 2026: if you are a W-2 employee working from home for the convenience of your employer, you generally cannot use Form 8829. This deduction is strictly reserved for those filing a Schedule C for self-employment income. The first section of Form 8829 is all about the math of your business percentage. You need two numbers: the total square footage of your home and the square footage of your dedicated office space. The calculation: if your home is 2,000 square feet and your office is 200 square feet, your business percentage is 10%. This 10% is the magic number that will be applied to all your indirect home expenses throughout the rest of the form. For 2026, the OBBBA has clarified that even virtual studios used for content creation qualify, provided they meet the exclusive use requirement. In Part 2, you list the actual costs of running your home. The IRS divides these into two categories: direct expenses and indirect expenses. Direct expenses. These are costs that apply only to your office, such as painting the room or installing business-specific wiring. These are 100% deductible. Indirect expenses. These are costs for the whole house, like rent, mortgage interest, real estate taxes, insurance, utilities, and repairs. You list the total amount paid for the year, and Form 8829 automatically applies your business percentage, like that 10% we calculated, to determine your final deduction. This is where the savings really add up, as you are effectively turning a portion of your personal living costs into a business expense. The IRS offers a simplified method for the home office deduction, which allows you to skip Form 8829 entirely. You simply claim $5 per square foot, up to a maximum of 300 square feet, a $1,500 deduction. While the simplified method is faster, it is often a tax trap for those living in high-cost areas. If you pay high rent or have large utility bills, using the actual expenses on Form 8829 will almost always result in a significantly larger deduction than the $1,500 cap of the simplified method. For 2026, with rising energy and housing costs, taking the time to fill out Form 8829 is usually worth the effort. If you own your home, Part 3 deals with the depreciation of your home. This allows you to deduct a small portion of your home's cost basis every year. However, there is a major catch to be aware of. When you eventually sell your home, you may have to recapture that depreciation and pay taxes on it. This is a complex calculation that can impact your future tax liability, so it requires careful planning for 2026 and beyond. Because the home office deduction has historically been viewed as an audit trigger by the IRS, the accuracy of your Form 8829 is paramount. The exclusive use rule is strictly enforced, and errors in calculating square footage or misallocating personal expenses can lead to immediate red flags. Furthermore, the interplay between the OBBBA's new digital asset rules and home-based businesses adds another layer of complexity. If you are unsure if your workspace meets the exclusive criteria, or if you need help navigating the long-term impact of home depreciation, we strongly urge you to contact a tax professional. A CPA or enrolled agent can help you audit-proof your deduction by ensuring your records, photos, and receipts are perfectly aligned with current 2026 regulations. When you're turning your home into a business tool, professional guidance is the best way to protect your investment.